So this is what we call an extreme swing low, the lowest price point here where price has been in recent times. And this is the highest price point where price has been in recent times. So these are high quality reversal points. So welcome back to another video tutorial of support and resistance. We are still looking at the different types of support and resistance levels, areas, or zones. So type number 3 is what we call a drastic move away. We call it a drastic move away. So drastic move away, this is where you have price come and trade into a zone. So we say this time we shall be using a zone like this. So you have this support level or resistance or key area. You see price comes into the zone and it trades away. So this is a drastic move away. If this is our zone, this is the key level. So you mark the key level and then you have price come into your key level. This is price. Then it reacts the level. So this move here, this is a drastic move away, this one. So this is what we call a drastic move because the move was very strong. If you look at this, the move away was very strong, or the steep reversal of price was very strong. How price reversed off of this level is very strong. So you have a strong steep reversal, which tells you how strong the level is. So this is a drastic move away or steep reversal. In a downtrend, it will be the same thing. You have your level drawn and marked as a key level. This is your key level. And then price comes and it trades into the level. But what happens? Price comes into the level. When it enters, it trades and moves away drastically. So this drastic move away from your support level is what tells you how key the level is to buyers and sellers. So that means when price comes back into this same level, there are possible trade opportunities you will look for. So you look for possible trade opportunities and trade with the level. So this one is called a drastic move away, drastic reversal. The move away was very strong. Drastic reversal. Trading can be very, very challenging, but that's why I'm here. Because if you learn these things, you will not find trading very hard. It can be very challenging, especially when you know this and that and that. But if you have the right information, trading becomes very easy. So this is where you will enter in and trade with the move. I'm here because I know trading is very hard and it is very challenging. That's why I'm here to make it simple for you. So let's go to the charts. We are looking at a drastic steep reversal of price. So we have this level marked here. Let's see what happens. When price was here, it traded away drastically. This is a drastic reversal. Price traded from the level strongly here. This is a drastic move away from price. This is our drastic reversal, drastic move, this one. Now price comes back. This is our drastic move away from this area. When price came back into the same level, see, price came trading. When price traded into the same level, we also had a drastic move away. You see, price traded away. So the possible trade opportunity presented itself in the same level. So this is what we mean by a drastic move away, this one. So you see, price comes, it trades away from a level, showing you that there is a strong presence of buyers and sellers in this area. And then it comes back the next time, it trades away. So the same thing happened over and over. Each time price comes into this level, it trades away. Price came again into this same level, and then you have price trading away drastically. The same thing applies. Price came back into this same level, and you see price again trading away from the level. Once you have this drastic move away or into the level, then that means price is again likely to react. So drastic move away is very, very important, and it is one of the quality traits you should look for when identifying support and resistance. So here we see price traded away from the level at different occasions. So this is a drastic move away of price here. If we bring this is our drastic move away, this one. The same thing applies to this. Price traded away from the level drastically here. It's a drastic move. So if I bring this one here, and then it presented you with a trade opportunity when price came into the same level. So that is how you identify a drastic steep reversal. So the same thing applies to this. Here price came to this level, yeah, and you had a strong sell. This is a steep reversal, this one, because price came into it and sold. So the next time price came into the same level, had a reaction of price reversing off of the level. So that one we call it a steep reversal of price. Drastic steep reversal of price. So here we have the same thing. After price came into this level, it gave us a drastic move here, this one. So The next time, this is a drastic move. The next time price came into this same level, we had a strong sell from the same level. We sold here. The same thing happened. This became our drastic move away of price. So this is our drastic move. Price came into this area and traded. So in the future, we expect when price comes back into the same level, because this is a steep reversal, we expect when price comes back into this same level, just as you see, there will be possible trade opportunities to short the market. So you mark here, and when price came into the same level, you see there were possible trade opportunities. This one is also a drastic steep reversal, because in the past, price came into this level, this one. You had price trade into this level here and moved away drastically. So if we mark this as our drastic move, this one is our drastic move here. We then wait for price to come back into the same level if we mark this. So what happens? When price comes into this same level, it trades away, giving us this move. The same thing happened in the future. When price trades into this same move, because this now becomes our drastic move away. So this one, it became our drastic move here. So price comes back into this same level, and see what happened. Price traded away from the level. So this is a drastic move. Once price gives you a drastic move, just like here now, you can expect that price is likely to respond to such a move. So your goal is to look for price action that says get into the trade. So that is called a drastic steep reversal of price. So let's look at the psychology behind why these drastic moves, the market respects them. When the market comes into it, the moves, it keeps respecting those drastic moves. These areas are of high interest to the big boys. And when I talk of the big boys, I mean the banks, the elites. So they will be looking forward to open and close positions at such areas. And because of the opening and closing of these positions, that's why you see price trades away drastically. The move away is very steep. It is very strong, because at this point, we have buyers closing their positions and sellers opening positions. At this point, we have sellers closing their positions and buyers opening positions. Here we have buyers closing their positions and sellers opening their positions. We have buyers opening up new positions and sellers closing their positions. Here we have these buyers closing their positions and sellers stepping in to open up new positions. And the same thing applies to this. Here you will have buyers stepping to open new positions and ride the move, while these sellers who had short this market to close their positions. So the double action of buyers opening positions and sellers closing their positions is what creates these drastic moves away from a key level. So let's go to another type of support and resistance. multiple reversals, bounces, and reactions. So here you have price, just like the name itself, you have price react to a level. Let's say if this is your support or resistance level, price can come and react to a level many times before breaking it. So these ones, we call them multiple bounces or reactions. You see price has been respecting a level a couple of times. Here, price respects it. The same thing happens, price comes and reacts to a level. So those are called multiple reactions, bounces, or reversals. So this shows this area is of key interest to buyers and sellers, as these buyers, they take action each time price is at this level. They look forward, these buyers look forward to close their positions, and sellers open their positions to push price lower. So the same thing applies. Buyers push price here, sellers step in to push price lower. Buyers close their positions, sellers open new positions. So these are called multiple reversals, bounces, or reactions. So we see here price respected this level. We see each time price comes into it, sellers close their positions, buyers open positions. Same thing applies to this. See, price comes into this level, sellers close their positions, buyers open new positions. The same thing applies to this. Sellers close their positions, buyers open new positions. So this tells you at these levels, buyers and sellers are taking action. So these many times of how price reacts to the level are the ones we call multiple reversals, bounces, and reactions. On the charts, we have these levels here. If we draw here, this one, in the past, you see price was here. It traded and went. The same thing applies in the future. Price comes and it trades the same level. Here it broke below, and then we see price again traded up. Price comes into the same level here, this one. It again comes into the same level, and again into the same level, again into the same level here, then again into the same level. So this tells you how key this level is of interest to buyers and sellers. When price comes into the level, sellers close their positions and buyers step in to open new positions. Price comes back into the level, sellers close their positions and buyers open up new positions. So these multiple times of how price is reacting to this level, these are what we call multiple reversals or bounces or reactions. Because we see each time price comes into this level, it reacts and trades away. Price comes, it reacts and trades away. So these many reactions tell you that when price comes back into the future, there is a likelihood of price again reversing from these levels. Multiple reversals, bounces, and reactions tells you buyers are taking action and sellers are also taking action each time price is in this level. If you look at this here, we say here price reacted to this level in the past, it again reacted to it here, then price traded into the same level. Each time price comes into the level, it trades away. It trades away. So these are multiple reversals because each time price comes into the level, it trades away, it trades away, it trades away. So these are multiple reversals of price off of this key level. So there are high chances that in the future, price again is going to reverse off of this level, just like the way it did. You see a strong sell downwards. So those are called multiple reversals, bounces, and reactions. You need to understand them in order to make good trading decisions and be good at using support and resistance. So let's look at the next. Another type of support and resistance. Extreme swing highs and lows levels. Let's say you have price here from a key level, and then you see price trades here respecting this level. It breaks above, it trades away, then it comes and breaks this level respecting this. So we say if price is doing this and it gives you such a key level, here you have this extreme swing high. This is a key level. As usual, we shall mark this as key level, key level. But this one, this level up here, we shall call it extreme key level. Extreme key level. We shall call it extreme swing high key level. Key level. This extreme swing high key level is of high interest to buyers and sellers because these buyers will be looking forward to open up. It is of key interest to sellers and buyers. In the past, you see price came and traded away here. So that means when price comes back into the same level, you will see those who sold to push price lower. They will be looking forward to push to get into the market. And those who are buying, those who are in this move towards this level, they will be looking forward to short the market. So in other words, at the extreme swing high, price is seen to be expensive. So these guys will be looking forward to close their positions and sellers will be looking forward to short the price because the psychology behind here, price appears to be at a premium price. So the same thing applies to this these ones here, these will be our extreme swing low levels. This is extreme swing low, extreme, this one. Let's say price did this here. So these are levels, but we want to see price come into this. So this will be our extreme swing low level. This one shall have this as our extreme swing low. So the lowest price point where price has reached in recent times. So this is the extreme swing low. Extreme swing low level. So this lowest price point where price has reached is what we call an extreme swing low level. Price comes here, and if price happens to come and it trades into this level, we expect a reversal because this level is of key interest to the buyers and sellers. When price comes into this level, buyers will look at the price of an asset to be too cheap, and they will be looking forward to open new position. So the same thing applies to these sellers who short this price from here to here. They will be looking forward to close their positions at this point. So the double action of buyers opening up new positions and sellers closing their positions is what creates a reversal to the upside. So that is the price action psychology or behind the formation of these extreme swing high levels, and they are regarded as high quality trade opportunities. So let's go to the chart. If you look at this chart, we are going to mark this as our extreme swing high, and then we shall mark this level as our extreme swing low, this one. The same thing applies to this. Shall mark this relative to where price is right now. This becomes an extreme swing low, and these other levels, these are just usual key levels. This is a key level. Then we can also say this is a key level here. So if we mark these levels, so this is a usual key level, and then this is also a key level here. So this upper one is what we call an extreme swing high level. This is the extreme swing high key level. So this is our extreme swing high key level. We have it marked like this. When price comes into this level here, you will see sellers opening new positions here, and then these buyers who will have pushed price into this level be looking forward to close their positions. It is trading psychology that when price comes into this level, the people who will have pushed price from here to here, they will want to get out of the market. And then we shall see new sellers step in, because in the past, there is history in the past, price sold here. So again, when price comes into the same level, you will want to see price. You will see the same institutions, the same buyers and the same sellers do the same thing. So this becomes our extreme swing high key level. And then down here, we say this is our extreme swing low level. So what happens when price comes here? The same people who went long at this point, they will also want to take action when price comes back into the same key level. And those who sold, who will have sold price, who will have pushed price to this level, will also look forward to get out and give room to buyers to step in and push price higher. So this is what we call an extreme swing low, the lowest price point here where price has been in recent times. And this is the highest price point where price has been in recent times. So these are high quality reversal points. These other levels, they still remain the usual key levels since we are looking at the qualities or the different types of support and resistance. So these are the extreme swing highs and these are the extreme swing lows. So let's go back to our types of support and resistance. So the next type of support and resistance is we have, so the next type of support and resistance levels we have acted, a level that has acted as both support and resistance. If you remember of strong support and strong resistance levels, strong support and strong resistance. So a level that has acted as both a support level and a resistance level is another good quality trait. So we are looking at the types of support and resistance, and we are saying the one which has acted as both support and resistance, or if you remember, strong support and strong resistance. So let's say you have a level like this, price has traded into this level and respecting it, then price breaks above. So we say this level has acted as both support and resistance. And we say in the future, if price comes into this level, there are high chances of price respecting such a level. So this, you have price here, respect the level. Price respects this level. Again here, price acted as resistance. So this was resistance, and here it is support. So the same thing applies to these ones. If price trades into these levels and moves away, we shall say support and resistance. So this level has acted as support and also resistance here. So when price comes back into this level, there are possible trade opportunities that will prevail. So let's look at this one here on the charts. So we say this level, if you look at this level very well here, we have this price level point. We also have this. Now, this price level has acted as If you look at this, it resisted here and acted as support. We then have this same level, supported price to go up. Price came into the same level and it again supported it to go up. The same thing happens, price came and supported it to go up. Price came and traded lower, but it still came back into the same level, it went up. The same thing applied to this, it went up. Now in the future, price came, it was kept lower. So that means this is both support and resistance. So the same thing applies to this level, price traded away, price traded away. So in the future, price comes and reacts to the level, and we see here price has respected the level. So this level is also respected here in the same zone and where price is trading right now. So we say this is a strong support and strong resistance level, because each time price comes into the level, there are possible trade opportunities that present themselves. Now, if you look at this, if we look at this level, we mark this where price is trading into right now, you can see this level has acted as both support and resistance. It has supported here in the past. It has kept price lower. It has again kept price lower. It kept price higher. So what happens when price comes back into the same level? Here, you observe the price action which will take place in the same level and look forward to act. So this is a strong support and strong resistance level. I repeat, because it has acted as both support and resistance, this becomes a strong support and resistance level. So the next type of support and resistance level is called visually obvious, or one which can easily be spotted, easily be spotted. It can easily be spotted. Visually obvious or easily be spotted. Let's say you open up your chart, you find prices doing this. You can tell me that when you open your chart and find when price has done such a thing, you can easily tell that this is a strong level. You can easily see this with your eyes. And it may be difficult for you to see this one. So this may be hard for you to see, but you can easily see this with your naked eyes and tell this is a level here. And the same thing applies. You can easily see this level and tell this is a level. So this one, these levels which are visually obvious, we call them the major levels. So this is a major level because it can easily see. And then these ones which are not easily seen, we call them the minor levels. So these are minor levels. Like, let me say this is a minor level. This is a major level, this one. because this level can easily be seen with eyes here, here, here. So those levels which can easily be seen with your naked eyes, those are the visually obvious levels. Let's go to the charts and we try to identify those levels. If I come here, if I come to this chart without using any indicator here, I can easily tell this is a level down here. I can also easily tell that this is a level here. And I can also easily tell that we have another level up here. And these other levels here can easily tell that there is another level here, this one. But you also realize there are some other levels, these ones here, these ones. So the levels which can easily be spotted with your naked eyes, we call them major levels. Then these are called minor levels, these ones. So we shall call these minor levels. So these are minor levels because spotting them is a bit hard. But these major levels can easily be seen. So these ones, we call them the major levels. Major levels. So this is a major level, and it can easily be seen. The same thing applies to this. You can easily see price traded here. You can also easily see this, that price traded in this zone. You can easily tell that. So those are called major levels. You can also easily tell that price traded in this zone. So this becomes a major level here. Together. The same thing applies to this. You can easily tell this is a major level. So the levels that run away from you immediately, or the levels that move away from you the moment you open your chart and see them, those are called major levels. So these levels are very, very important because you want to look for such levels when price goes to them. When price goes to such levels, there are possible trade opportunities that present themselves. So the easier you can easily spot a level, that means another trader and other big institutions are seeing the same level. The easier they are to spot them, that means the easier they become to be spotted by every institution. So they are easier to see, that means others can also see them. But the harder they are to be seen by other institutions. So this is a visually obvious key level. You can see here, 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 and you tell that price. If price comes into this level, you are going to act based on what you have seen. So visually obvious levels, you don't need to see them while struggling. So because you can easily see these levels, the institution can also see them, which results in the opening and closing of positions. Visually obvious levels, they can easily be seen. Let's look at another type of support and resistance. We are looking at support and resistance. Recently respected levels. Recently respected test. So here, recently respected levels you can have price, let's say maybe price has been here, it comes back into a level, it breaks above and comes back into a level. So there are high chances of price respecting this level. So this one, because price, this level reacted to this price, it gave you a reversal, giving you this key level. Price came and respected it here. We broke above. Now, this here, this is where price recently respected it. So a recently respected test was here. Recently respected here. So this level was respected here at this point. This one. This is a recently respected test. This one. Recently respected test. So price recently respected it at this point. Then price broke above. Because price recently respected this level, so we are expecting that because the level was recently respected on the left here, so the same thing is likely to happen. You may expect possible trade opportunities present themselves at this level. So how do you find such a level? So the first thing is for you to find where price reversed from. Let's say price came here, a clue. You find where price came and traded away. This one, you mark your level. So the same thing happens, price comes into the same level, giving you a recent respected test. So when this price gives you a respected test, you can expect the third touch is coming again to test this level before price can trade away. So we shall say this is the point that gave us a key level, and then this one gave us a recently respected test. This one is our recently respected test. I pick this. This is our recently respected test here at this point. And then our trade setup is here. So this is where our trade setup, we look for a trade setup. Trade setup here. This one. And then you trade. Find the key level is step number 1. This is the key level. Then this is the recent respected test or spot where price reversed from. And then the trade setup presents itself here because the market is still retesting this level. So those are the 3 steps we follow. Step 1, find a key level where price traded away. Step 2, recently respected test. And then step 3, you want to see price come to retest this level to present you with an opportunity. So why is it important for you to look for a recently respected? So here you let the market tell you that this level is indeed valid by retesting it. So the market comes to retest this level to see if it is valid. And once you get good price action, then you trade with the move. So let's let's look at such example on our charts. Let's say we said step number 1, find a level. So here, this is our level where price traded away. Step number 2, we are marking the level and waiting for price to come into the level. So this is our step number 1, the level, price comes into again the same level and then it trades away. The same thing applies to this one, price is here. So we can say here, price traded away. Then this came and gave us recent respected test, this one. So this is our test spot, this, and then the trade opportunity presented itself here. So this is where the trade opportunity presented itself. Trade setup. The same thing applies here up. You had the level where price reacted to. Then you also had price reacted to this level. So this spot, this is our recently respected spot here. This is our test spot. And then this provides our entry trade setup at this point here. I repeat, this price, this is our recently, yes, this is our recent test spot. We are looking at this one here. Price broke above, came to retest this level. So price respected this recent test spot. It broke above, came to retest. But because this level has been respected in recent times, we took this trade from here to here. That is the meaning of recent respected test. So the same thing applies to these others here. You will have price, it has been in this area. You have rejection 1, rejection 2, rejection 3. So price comes back into this same level. Because of this recent respected test, there are high chances of price respecting this level to push lower. So this is what we mean by a recent respected test. So how do you get it? Step 1, find the level or key level where price reacted. Like here, price reacted here. It came again, it reacted, and then this is our recent spot based on where price is. So price comes back into this level. You look for a trade setup and you trade. The same thing applies to this. You had this is the recent spot. But when you look at this recent spot, the market has already respected it here in the past. And because it has been respected in recent times here, price traded away. The same thing will happen if price comes back into this level. Because this is a recent respected test. So when price comes into this same level, you look for possible short opportunities as long as the market presents them to you. So that's how we use the recent respected test to come up with a key level as one of the qualities. So we are still looking at types of support and resistance levels. We have combined or combining the previous support stroke resistance trades. So for you to tell whether the level of support and resistance, whether the level is going to hold, so this is what we do. You combine those quality traits or those types of support and resistance levels. So the more a level has out of those types of supports and resistance, all those traits we have looked at, the more the level is likely to hold. So let's say, for example, you have price doing this, having these levels, and you right now you are analyzing the market, it is coming to such a level. This is where the market is coming to. First, if you are to analyze this level, if this is where your setup is going to be, if I really want to use this level, then I will realize that there are some quality trades this level has. One, you can say that it is the extreme swing, low. So meaning when price comes back to this extreme swing low, price is going to be deemed to be cheap. So possible trade opportunities will present themselves here. We shall have buyers wanting to step in and buy, and also sellers who push price up to here, getting out of the positions. So this is trait number one. Then two, we see this same level has multiple reversals, or what we call bounces or reactions. So that means the level is of key interest to buyers and sellers. Because of these multiple reversals or reactions, price is likely to respect it. Then we also have here, it has been recently respected. So it also has a recently respected test. A recently respected test. So once you have at least these three qualities or traits, it tells you that this level is likely to hold, and then you can rely on the level. It is reliable. If we look at this level here in the middle, we can say the level has recently respected here. It has multiple touches, bounces, and reversals, just as you can see. We have here price reacted, it again reacted here, it again reacted here at this price level, it reacted on the left. So this one gives it multiple reversals, bounces, and reactions. We also have it being recently respected here. So it has also recently respected test. Then the other thing we can say, which is here, it has acted as both support and resistance. If we are to come across this other level on top, if price is approaching here, then we can say, assuming price is approaching this level, we can say it is the extreme swing high. It has been recently respected. We have drastic move away from it, because each time price comes into it, there is a drastic reversal. Let's look at this on the charts. So if you look at this key level here, we mark this one. which quality traits does this level have? One, we shall say, one, it is found on the higher time frame, found on the higher time frame. Because if you look at my here, this is a weekly time frame. So this is a weekly key level. So this is weekly, and we always say things found on the higher time frame, that is the weekly and monthly, they hold more weight. So this is trait number one. Let me put them here. Then number two, we see each time price comes to the level, we have drastic reversals. Price trades away drastically. So you see price comes into this level and drastically moves away. Price drastically moves away. So the other qualitative trait they have is drastic move. It has drastic moves. That each time price comes to the level, it moves away drastically. Then the other trait which they have, we can say they are visually obvious. Visually obvious. So that means you can easily spot them. You can easily spot them just by mere looking. You can easily spot the level by mere looking at it. So it is visually obvious. And then the other quality trait we see here is, okay, at least we have three, then we can treat it as a good level, a reliable level, such that in the future, when price comes to this level, we look forward to take trade opportunities. And you can see what happened. Price came in the future to retest this level, and the market sold strongly for more than 2,000 pips. These are 2,000 pips because of these qualities being on the weekly time frame, drastic moves, and visually obvious. So let's look at this one. Let's look at this level. You have such a level here, here. What does the market tell you when you see such a level? Yes. So here you have price first of all, this one, shall use it as a zone. We say price respected it here. These are what we call imperfect zones. So here price respected it, it respected it, price came and respected it again. So we see price is respecting the level. It is also found on the weekly time frame. It has acted as both support and resistance. So when price comes back into the same level, there are possible trade opportunities the market is going to be giving you. So in the future, when price comes into the same level, you expect price can easily react to the level. So those are called multiple reactions, bounces, and reversals. So you see here, price is respecting the level, is respecting the level. So the more qualities you have on a key level, the more price is likely to respect your level. Go on your charts, look for those qualities, the different types. So this is the catch. This is the catch. You don't need to look for all of them. But if you can find at least found on the higher time frame, found on the higher time frame, higher time frame. Then also multiple reversals or reactions, recently respected test, and then also drastic move. If you can have at least these ones, any of them to appear on your support or resistance key level, look for this. I wish you the best. Keep learning.